Network released new advisories recently on 13th as well as on 12th of April 2023. It is announced that certain e-invoicing businesses must report documents on the e-invoice portal within 7 days of the date on the invoice or credit-debit notes. The new restriction pushes taxpayers to adopt a real-time invoicing for their businesses. Hello, I'm Annapurna from Team Clear. Subscribe to our channel to know how tax updates impact your business. Now, watch this video till the end to get a complete story on how the new time limit for e-invoicing under GST impacts your business as well as with the solutions. Report all tax invoices, credit notes and debit notes for business-to-business or B2B transactions within 7 days from the date of invoice or credit-debit note. So, suppose a tax invoice is dated 2nd May 2023. You must report it on the Invoice Registration Portal or IRP by 9th of May 2023. All such businesses whose annual aggregate turnover or AATO at a PAN level is rupees 100 crore and more must meet the time limit condition. Also, the same time limit applies to older tax invoices and credit notes, debit notes. But the restriction does not apply to taxpayers whose annual turnover is less than rupees 100 crore. The IRPs or e-invoice portals will begin implementing this from 1st May 2023 onwards. This update has come from the GST Network as a new validation on the e-invoice portals or IRP. However, no notification is issued under the GST law as yet fixing any timelines for generating e-invoices. Nevertheless, one must follow the instructions from the GST Network to ensure a smooth compliance. The IRP has built-in validation only to accept tax invoices or credit debit notes within the 7-day window. If you try to report an invoice or CDN dated older by more than 7 days, then the validation will not allow the IRP to generate an e-invoice for it. Such businesses cannot generate e-invoices against their time-lapse invoices or credit debit notes. If you miss the 7-day window for an e-invoicing, then your team must reverse the earlier document, raise a fresh one once again, and report the new one on IRP. If your team fails to do so, it will be considered non-compliance under the GST law. All these delays reporting of the sales details in GSTR 1 return. In turn, it affects the flow of input tax credits along the supply chain and hurts customer relations. A huge penalty will be imposed if the business fails to take suitable actions on the invoice or credit debit notes before issuing it to the buyer, as I mentioned earlier. Penalties under GST will be incorrect invoicing for lack of IRN and signed QR code will attract a penalty of Rs 25,000 per invoice. Non-generating e-invoice against tax invoice or credit debit notes will indirectly attract penalty of 100% of tax due or Rs 10,000, whichever is higher for every invoice. Performing reconciliation between e-invoices generated and sales register is no longer a choice but an indirect mandate. Taxpayers must do e-invoice versus sales recon daily to ensure that data in their ERP or billing systems are in sync with the NIC or GST network data at all times. Hence, a connected system is now essential for accurate filing and compliance. Now we know what you are thinking. Manually doing this daily would be time consuming and errors are bound to happen. We have a solution for all this. We at Clear have engineered a connected finance ecosystem to help you hyper-automate invoicing process. So no more manual errors. In fact, you end up saving time and effort and proactively predicting the risk. Data from Clear e-invoicing platform will also flow into Clear GST platform, where you can run draft e-invoice versus sales daily and before filing GST R1 monthly. Having one partner for indirect taxation will ensure there is no double work. Our all-new GST solution is helping large businesses such as yours to be relieved from potential notices. While you are already our partner with e-invoicing, we believe with our connected ecosystem you can get that peace of mind you always wanted. We have come to the end of this video. If you like this video, then please hit the like button. In case of any doubts about this topic, please do mention them in the comment section. Our team will address them for you at the earliest. Thank you.